60 pence sterling.
Now, as we've been reporting all this morning, the Australian share market posted its biggest one-day slide in a year yesterday, falling more than 3%. And for more on this, we're joined now by Rod North, Executive Director of Bourse Communications. Rod North, good morning.
Good morning.
That was a nasty day on the markets yesterday.
Yes, a nasty day, but it's always difficult, particularly on a Monday when there's not much of a lead on local news. So largely our market really had to react from what happened on Wall Street on Friday.
You think it's all it's down to?
Well, I think a fair bit of that has to do with that because, look, a lot of companies are doing pretty well in Australia at the moment in terms of their earnings. So, I mean, the market really looks for leads. And I think, you know, with the amount of sort of data coming out this week, I think the market will be looking very closely at that. And, of course, the whole, you know, international scene, of course, does play a significant part in sentiment. And we certainly saw that level of optimism of a month ago, you know, turn to fear, really, in the last few weeks, particularly waiting for the resolution of, you know, how the euro was going to deal with the debt crisis. And, of course, now that that's been resolved to some degree, of course, there's still some scepticism as to how that's going to sort of pan out.
Among the bits of data out this week is the release today of the minutes from the last RBA board meeting, which usually gives some pointer to where interest rates are heading.
Yes, that's correct, but I suppose a lot's really changed since the 4th of May. And
it has indeed.
In some respects, I suppose we've really got to look at the context of, you know, what's happened since then, because the $1 trillion bailout package had not been worked out at that particular point in time. So I suppose in some ways those minutes that are going to come out today are probably to some degree fairly redundant, and we'll really sort of need to look for, I think, the data for this week for consumer confidence, for inflation confidence figures and so forth, to get some idea of how things are panning out in terms of what view the RBA may take in June.
And you're right. I mean, and those sets of data will probably and surely give us a much clearer indication of where we really are with the Australian economy. The trouble is, all these markets around the world just seem to be so skittish at the moment, don't they, Rod? I mean, we're saying before that they're jumping at shadows, and everyone is. Whether or not your situation is actually a lot better.
Well, that's right. And I think what we really have to rely on, and particularly in relation to the share market, people just shouldn't forget that what drives the share market is earnings. And the real test, I suppose, will be to see how companies are going to perform in this period up to the end of June. And then when the reporting season occurs in July, that will give us a very strong indication for the full year how those companies in Australia have gone. And I mean, we've seen many companies reporting in the last few weeks in the US, you know, much better results. So we've got housing starts coming out in the US today, which will be a more positive figure. So there's some signs there which are part of a recovery process, but we also have that nervousness. In any recovery, it's a long, slow process, and things can change quite dramatically in terms of people's level of optimism and so forth.
Now, locally, one company that has reported its sales figures for the first quarter is Myer, and a completely disappointing result. I suppose not surprising in the sense that sales are off, as they are for most retailers, but Myer has put a lot of store in its rebuilding process.
Yeah. They certainly have, and I mean, those figures were pretty flat because it shows that the turnover is 671 million, but they're still looking for a profit. They're still looking for their forecasts in the prospectus of last year to reach an earnings before interest and tax of 261 million, and they'd hoped to get there. But the market didn't like it because the shares dropped below $3. If you're in it, you know, $4.10 last year, you wouldn't be too happy today. But the market's probably going to go up a little bit today following Wall Street, because the futures are sort of showing an increase of about 30 or 40 points. So maybe Myer might tip back over that $3.
Rod North, good to see you again. Thanks so much.
Thanks very much.
Thank you.